Hello and welcome back to the Done Deal YouTube channel. My name is David OC, and ordinarily on this channel we review the new cars to the market, talk about their advantages, their disadvantages, and take them on a proper road test. However, one of the most important things when buying a car is actually financing it, and I avoid talking about it because I'm not exactly a financial advisor, I'm only an expert on cars. However, today we're going to be meeting up with someone who is a financial advisor and who can give you the best advice when it comes to getting finance on a new car. So I'm joined by John Duggan. Now John, you set up Loanitt, you know finance inside out, you spent the last 15 years working in it. Can you talk us through some of the biggest mistakes people make when it comes to car financing?
Yeah, so Dave, the biggest mistakes people make when it comes to car finance is to underestimate it or not give due consideration to the different options that are out on the market. They all come with different criteria. The biggest problem is people get to the middle or an end of an agreement and they're faced with something that might surprise them, which then becomes a problem. When you think about it, a car is the second most valuable asset that we own. Think about all the due consideration we put into a mortgage. Now granted, a mortgage is 35 years long, a car finance loan is 3 to 5. However, it also is the second most valuable asset we own, which means it's also the second or possibly highest payment going out of our account every month, which really means we should be giving a little bit more due consideration to it and just find the options that's right for you. So a personal contract plan or PCP finance is a secured loan. So what does that mean? It's the car, the loan is secured against the car. That means that you don't actually own the car until you make the final installment. Now, there are obviously pros and cons to that. It means you don't own the car until the end. It also means that if you fall behind on your repayments, there is a chance that the lender might reclaim the car. However, there is advantages to that type of secured financing because it does improve the chances of approval because the lender takes into account the asset into the decisioning process, and it actually can increase the possibility of the amount of the drawdown as well. Hire purchase is, I suppose, a simpler agreement than the PCP. There's 3 elements to PCP. There's the initial deposit, the monthly repayment amount, and then the end option, which is a balloon payment, okay? Which gives you an option of you either repay the balloon payment, you return the car, or you can enter another PCP. Hire purchase is a far simpler agreement. The entire amount borrowed is paid over equal monthly installments. And at the end of that, then you own the car.
Okay, and then when it comes to unsecured loans, how does that work?
So unsecured loans are far simpler, but again comes with their advantages and disadvantages. They're not secured against the asset, which means the asset is not taken into consideration when the lender is decisioning the loan. However, that does mean for the person that the decision is completely based on their credit history. So typically, the criteria or the decision criteria is a little bit more stringent, and the customer would have to have a very well-kept credit profile, as opposed to the secured financing where you have hire purchase PCP where the asset is taken into consideration. Yeah, no, absolutely is the simple answer. The only consideration you have to take into account is that some of the agreements, so PCP or hire purchase, will have a minimum amount that you have to pay before you can do so. So absolutely is the answer. You can definitely refinance, as we call it, your car, but just check your contract and just see what the minimum amount is, because until you get to that point or until you pay that amount, then you won't be able to refinance. Absolutely, but of course moving from PCP to hire purchase would be a lot more difficult given the fact that there's that balloon payment at the end, but of course anything is possible. Moving between any of those agreements is possible. It's just a matter of contacting a local broker and being able to work out what those options are. Again, it depends on your own personal circumstance, but most approvals, it can be anything up to instant to 24 hours. It really depends on the personal circumstance of the individual, but you would be looking at a maximum of 24 hours. The age of the car is important depending on the agreement or the options that you're going for. PCP is definitely aimed more at the new car. Hire purchase, the hire purchase agreement, there is an age limit with most lenders that will vary, again, depending on lender, and that's why it's important to have a look at those options and to have someone to talk you through those options. With the unsecured personal loan, because it's not secured against the asset, there's no age limit to the car. So if you're looking at buying an older car, say a 2007, 2008, 9 car, then the unsecured personal loan is probably your only option, because of the fact that with the hire purchase or PCP agreements, that they won't actually cover that. So buying privately does limit your options. You wouldn't have access to the likes of hire purchase, etc. If you're buying privately. However, if you're looking on Done Deal, which has all the car dealerships across Ireland, who are then linked to the likes of Loanitt with a finance option, it gives you far more options. You have access to all of the different finance options, with, as I said, all of the different lenders, which increases your chance then of therefore approval and getting that car. Yeah, so Dave, we've already talked about the amount of options that exist on the market. All of those options come with so much different criteria within those agreements as well. It's very important to understand them. So by going to someone like Loanitt, you have access to a financial advisor who will talk you through all of those different options and find a solution that is best suitable to you. If you're looking for a hotel, you're going on to booking.com. If you're looking for a flight, you're going on to Skyscanner. You're trying to get the best option. What does that mean? It means that your bank is not necessarily your best option. Your first option is not necessarily your best option. You need to find choice and look for the best value on the market and understand the complexity of all those agreements. And the second thing, by coming to the likes of Loanitt and being able to talk to financial advisors and qualified financial advisors, you get that great customer service. And that's the difference between us and other financial institutions on the market. You look at the reviews online, there's unbelievable customer service and helping people understand those options.
So there you go, that is the common mistakes, but also the different types of financing available when it comes to buying a car. Now, of course, if you do have any more questions, reach out to someone like Loanitt and get some genuine, qualified advice. And of course, if you are looking for a car to buy, then make sure to hit the link up here, as we have over 1,000 trusted dealers nationwide who can help you also with your finance application. Thanks for watching, and we'll see you in the next one.